Hello, welcome to today's video for Tuesday, the 26th of February, 2013. Taking a look at gold on the daily time frame as well as silver on the hourly time frame, and the record volume in silver. So let's start this off within the daily chart for gold. And it's made a move up to this 18 average, pretty much the 18 average of closes right now, which is 1610. So it's barely breaking above that right now. And what's important here, you had a major decline. Well, you look at this 18 average in here, which was flat neutral at the time. And it broke through support, and that support level was roughly around 1650. So it dropped about 100 from the break of support. So now when this occurs, what's important on the first rally that you can significantly notice, which is definitely in place now, to adjust the Fibonacci from this low to this high, and it's extremely important to hold the 61.8% down level. I'll talk about that within the silver hourly time frame. But as far as this 18 average band is concerned, what you need to see happen is for this thing to flatten out. Thus, by holding 61.8%, and of course moving up would work well. And if it doesn't want to go sideways and it breaks through, then this is the area you'd be looking at for support, and you're looking to establish resistance as well. And of course, key resistance right on that line there. Silver now on its daily chart. But before we see that, a couple things to go over. One, the running average, which is just starting here from the low. So far, all we can see is that it's done well in the last couple of days, is holding as support. Secondly, I've added volatility on the left-hand side, which explains how the current period is for its move, which is its high subtract the low divided by the low again. So for today, 2.25% for gold, and it's been averaging 1 1/9% over the last 100 periods. Silver, on its daily time frame, its average volume is basically 2 2/9 for the most part, which is double. And today, 3% for silver as well. So a little bit of an uptrend here. So let's same thing, of course, for gold as far as where we're at, so I'm not going to talk much about that, but there's key resistance right there, and I'm expecting around 29.90 to be its possible move target, which I'll explain now within the hourly chart. But I want to talk about the Fibonacci from this low to this high, because that's what I was talking about within gold, and here's an example here for such. So you made this high, and you come back and you find some support at the first fib level, and then trade around it, getting more volatile basically, and then you have this huge candle here, which is a 2.5% volatile move in itself, which did come back down to this level, and then boom, went much higher, which shows the failed move before the fast move to occur. So what I would expect is for this line to move to here. And thus, for that to occur, you need to have the price go up to about 29.90. So it'll be interesting to see if that's the case. And then I'd be looking for support roughly around this 29.25 level, as where, of course, this number would move up to as, or this line, excuse me, would move to as well. Now, the volume's been pretty massive, actually. And we'll just go back to the daily chart for a second, but it all started back in here. I got a link from the CME group that's talking about higher volume, and if I use NetDania to see the chart, so when you show the volume within it, what it tells us is Sunday in itself, which is just a few hours to start the day, there was a lot of volume. And then that continued into the Monday session. So Monday in itself, if you look at it, you'll see that there's probably close to 3 million volume within it, however they rate it basically. The numbers are different than CME, but CME is stating large volume as well. Today, large volume again, also approaching the 3 million mark as well. So we're seeing this high volume come into place as the market's not getting crushed. That could be an indicator that this thing is ready to get going. Now, last year, there was high volume from the middle of June to the middle of August, and obviously it did start a rally, but nothing that did sustain itself, basically. Okay, so that's it, but just something to keep in mind. As far as the indicator that I've been using, I have this level, and just drew this up really quickly, but minus 0.339. So it's moving higher, still telling us that it's still oversold. And thank you for tuning in to today's telecast, and have yourself a great day. Bye-bye.